Chill vibes, chill vibes. We're feeling the vibes right now here on Swan Signal Live. Happy Friday, everybody. It's chill vibes, it's nice vibes, positive vibes. We're saying goodbye to Steven as a regular on the show, and it's been an awesome run. You got a lot of fans out there, Sun God, and we're gonna miss you, man.
Me too. This has been, more than just the show we go back, but doing the show has been amazing and so much fun hanging out with you guys every week. And, I'm gonna miss it. I'll definitely be back, but I'll miss being a regular for sure.
And to celebrate, we got Brandon back on the show after a bit of time off there. So it's good to have you back, buddy.
Yeah, I'm happy to be back. And in honor of Steven's last day, I had to wear my exclusive Capital badge here.
Let's go, man.
Limited release. I had to pry it from my 3-year-old's hands. He loves this thing.
Yeah.
Did Steven sign that one?
Unfortunately, no. Good point.
I'll have to get it for you.
Somebody actually at the BPI event actually asked you to sign one of the Vibes Capital coasters.
They did. There was one of one signed Vibes Capital coaster. So.
Shout out to Kyle if you're watching, man. That's hilarious. Well, nothing but happy and good vibes. Great week in Bitcoin too. We've got some big news. I think maybe the biggest news, arguably, of the week is this Bitcoin being used or allowed to be considered when applying for a mortgage. So the FHFA is reportedly instructing Fannie Mae and Freddie Mac to treat Bitcoin as an asset in mortgage considerations. So this is obviously a massive shift. In fact, Corey Clipston told me that he was actually denied a mortgage request a few years ago because he had so much of his assets in Bitcoin that were not allowed to be considered. So he was interviewed on Blockworks. I need to check and see if that article dropped, but it does happen, guys. It does happen to Bitcoiners. So this is interesting and big news. I'd love to hear you guys' take on it. Let's start with you, Steven.
Yeah, totally. So I think something I noticed online is people don't, it's not always immediately apparent what this news means or what it would mean if fully implemented. So maybe I'll start just by explaining that. So when you go for a mortgage, there's two things that they're checking. They're checking your income, and they're also checking kind of your net worth, your assets and your holdings. And so what happened previously is they would not, generally speaking, I don't think this was 100% of the time, but generally speaking, they would not count Bitcoin holdings. So if you had Bitcoin, they just wouldn't count that towards your net worth calculation. And so sometimes that could be a problem because it's like your net worth wasn't high enough for them to feel comfortable giving you the loan that you want. So this is different than like you're taking the mortgage against the Bitcoin, or the Bitcoin is collateral, or you have to give them the Bitcoin or sell the Bitcoin or whatever. The Bitcoin is not involved in the financial transaction in any way. It's just how they calculate who they want to lend to. And so this opens it up so Bitcoiners are not unfairly punished for that being how they choose to store their wealth. It makes getting loans easier. So a really cool development. And I think just further evidence of Bitcoin becoming just so much more widely integrated into the financial system and coming to really have its own place in our economic environment.
Yeah, piggybacking off on that, I think the most important thing here is that Pulte tweeted it, saw a response saying, hey, why don't you add Bitcoin to this? 24 hours later, there's movement.
Yes.
That's incredible.
Absolutely.
Not committees, not 6 months later, not next legislative cycle, none of that. Just tweet here, boom, we're moving.
So can I go apply for a mortgage now and have my Bitcoin be considered as an asset?
I don't know if it'll be that immediate. I mean, maybe. I can offer a bunch of thoughts here. Before I do that, I have to throw this up. I almost put it on, but I didn't want to take off the sweater. My hair's it's in place right now. I couldn't risk taking off the sweater and putting on a different shirt. But this is the shirt that I was wearing in Miami Beach New Year's Eve with this crew of 4. So it's right here.
Yeah, this day right here.
Look at that. That's the photo evidence.
Yeah, we made that. We made that ship for Sailor. Put it together.
Yeah. That's a great.
It was a nice New Year's gift.
Yeah, Swan ship. That was something, right? That was great. That was a great party.
An old wooden ship used in the Civil War era.
It's a good boat.
Great reference.
Cool boat, strong boat. Never seen a boat
Civil
like that.
War was, most people don't know this, but the Civil War was actually fought over paper Bitcoin. States' rights.
We'll come back to that one. Yeah, I have definitely some thoughts on this one. Also, just throwing it out there, as we said, Stephen was at BPI. We have to add to our agenda. Stephen, you got to give us from that event. But on mortgage stuff. So firstly, definitely a big deal. Bitcoin is getting treated more as an asset that, the traditional financial assets are getting treated. But I think there's some other things to keep in mind here. So firstly, I'm not going to claim that I have like a totally comprehensive view here, but I did run this by a friend of mine who's been a mortgage broker for like a couple of decades at some of the big shops out there. So like Stephen was saying, it is not the first thing that they're going to look at is how many assets you have. First, they're going to look at your credit score, your income, your debt to income ratio. What is your job, your employment history? They're going to care a lot more about those than what is the pile of assets that you have. They do care about assets for something. I think they call it cash reserves. So after you make your down payment, they're going to want to see something. Every bank's going to be a little different, but call it like 6 to 12 months of cash reserves to be able for, not even cash, could be in a liquid asset, for you to be able to pay. If you lost your job the day after getting the mortgage, they want you to have some cash to be able to make those payments. That doesn't, if you have a big pile of Bitcoin right now, it would only matter for those cash reserves. It's not going to help you if you have a bad credit score, no income, bad debt to income, and a bad employment history. So that you have to put that out there. What would really be a game changer is if Bitcoin can be counted as income. And you might sound like I misspoke there. How would an asset count as income? But that is the case. It's called asset dissipation. So you can have an asset that if it's big enough, you basically say, hey, if I were to sell this asset down over my 30-year mortgage period, then the issuing bank would say, yeah, sure, we'll count this as a form of income. If it's a stock that gives you dividends, then, they'll kind of count that as well. That would be pretty big for Bitcoiners who have a big pile of Bitcoin and it gets counted as, I think they call it imputed income. They translate it to income. As far as I know, there's no discussion of Bitcoin being treated as that for now. So I'm throwing some cold water on this. I don't think it's like immediately relevant for Bitcoiners who are going to go get a mortgage soon. And then lastly, there's this whole other element of like, all right, fine. Even if they're counting Bitcoin in some way, are they counting your Bitcoin in cold storage? The answer is almost certainly not. Just like if you had $10 million of gold bars in your basement, they're not really going to count that. So it's probably going to have to be in some form of third-party custody. Maybe there's some future world where you can prove to them that you have self-custody of Bitcoin and they'll count it. But I think that's a long, long time away. So glad that it's happening. We're going in the right direction, but there's a lot of other nuances to consider here.
And here's real quick. I want to answer this question, Stephen. So this is not a requirement for banks, for private banks. It has been directed for Fannie Mae and Freddie Mac, and it has also opened up doing this as an option for private banks. So it's not required for private banks. Just to clarify.
So one detail. So the way I think this will work for self-custody is that if you want the Bitcoin to be counted, you move it like to Coinbase. You demonstrate that it's in Coinbase and you can take it out after, would be my assumption. I think you just need to know they're not going to recognize it in a wallet, but because of the nature of Bitcoin, unlike gold bars, you can move it to a custodian, get a snapshot, and then take it out, would be my guess.
I think there's a good chance of that. And related to this whole discussion, also the question that we just showed at the bottom there, a friend of mine who's a mortgage broker, I asked him the question of how much of this is in your power versus how much is in FHFA. And his response was basically, I won't say the name of the firm he works for, but XYZ firm that I work for will do whatever the FHFA says. Yeah. So if they kind of issue guidance and says, hey, you should do this, the banks will do it.
Yeah, makes sense.
Well, just another kind of notch in the,
Correct.
I guess, step in the ladder on up to, legitimizing Bitcoin as an asset in the financial system. And similarly, Texas has become the first state to establish a actual real Bitcoin treasury strategic reserve with some teeth to it. So Greg Abbott signed the bill on June 22nd, earlier this week, to create the reserve. The actual acquisition of the Bitcoin is still pending, however. The state is in process of setting up the necessary infrastructure and governance to manage the reserve effectively. So we do expect a $10 million initial buy, and we'll see where it goes from there. This is the $10 million allocation represents a 0.0004% of the state's overall budget. So we got, you gotta open the door a crack, and then we got to bust it open and see if we can get them move that up to at least 1%. Let's get to 1%. That's a nice goal.
Adam Back had a great response. He said something like, "Hey, I thought everything was bigger in Texas. Like, this is not going to work out."
That's pretty good.
That's good, man.
That's pretty good. All right. Well, Texas, good job.
Yeah.
Leading the way. It makes sense. Satoshi Nakamoto Institute, I think, was founded at the University of Texas at Austin by Michael Goldstein and Pierre Rochard in like 2012 or something like that, maybe 2011. And so it's pretty cool to think that just down the road in the state capitol in 2025, the first U.S. state would sign a strategic reserve bill. So absolutely. Pretty cool.
I actually spoke with Bitstein at BPI for a while. We had a good conversation. So shout out Michael. And speaking of that, John, you asked a question. I want to just shout out the BPI team. So it's just at the Bitcoin Policy Summit in DC. Put on. If you're not familiar with the Bitcoin Policy Institute, you should be. These guys, there's two things they've done that are really impressive. One is that they have built the most kind of influential policy arm for the Bitcoin community, and just have really made, the vice president, Vance, shouted them out by name during his talk at the Bitcoin conference. So, they really have just punched so above their weight class. I think it's a team of 9 people. And they've just had a real presence in Washington, really fighting for Bitcoin and doing a lot of good work. So that's one of the impressive things, is that they just built an incredibly influential organization with a very small team. But the other impressive thing is, I remember in 2022, Swan actually did a little bit of a fundraiser for BPI. This was in the very beginning. They were just getting going. And I think we contributed $10,000, and Peter McCormick contributed $10,000. And a bunch of Bitcoiners did a little bit of a donation chain. So maybe we raised them 30 grand. And this is when they were small and just starting. It wasn't, a huge amount of money or anything. It was relatively small. But I remember going on Peter's show and talking about BPI, because I thought these guys were going to knock it out of the park. I thought it was just amazing what they were doing. And, 3 years later, it's just incredible what they've accomplished.
It's only been 3 years. It's amazing. They've done so much. Super talented, super cool people.
Yeah. So shout out David, and also shout out Matt Pines, who recently came on, and everybody else.
And some Bitcoiners would say, why are we groveling to DC? Don't we have a technology that makes them obsolete? And I got to say it again. We've been saying it here on the show for a while, but someone has to go talk to the regulators, because they can make our lives worse. They can slow down adoption, and they can hurt American Bitcoiners. So shout out to those guys, because I certainly don't want to be on DC doing that kind of work, but very glad we have people who are very serious doing that work for everyone else.
Yeah, absolutely. I agree. And we're actually working with George Washington University. They're putting on BTC in DC September 30th, October 1st in DC. It's going to coincide with the opening of the new pub key in DC as well. So the Bitcoin DC presence is ramping up, and BPI really trailblazed the way. And like Brandon said, it is important. It might be anathema to some Bitcoiners, but it does have to be done. Somebody has to do that work.
Let's talk about the new pub key in DC. I need to pause here for a second. So I was talking with was talking with the founder there, and I was stunned to learn that PubKey DC is a 12,000 square foot space. If you've ever been to PubKey New York, you'll understand it's quite a bit smaller than that. So this is a complete, there are like Michelin star chefs that are being interviewed right now. This is a completely different that's not me. PubKey is amazing in New York and you should go to it.
But it is fundamentally different. It's not necessarily better, but yeah, it's different.
But this is different. And so even if just like I wasn't aware of this, I heard like, oh, PubKey in DC, that's cool. But like, you need to check it out. It's a completely different beast, and I'm very excited to go.
Yeah, that week, BTC in DC, the week of the last week of September and early October is going to be awesome. PubKey is going to be doing all kinds of stuff. BPI will be involved. We've got, policymakers and regulators that will be there, but also the HRF. We're talking to HRF about coming out and doing some stuff. So it's going to be there's going to be policy stuff happening, but also just a more broadly kind of Bitcoin cultural scene happening that week. So you guys should check it out, btcndc.com.
And for those of you listening who've been to the New York PubKey, which I'm sure is a bunch of you, I was talking to some of the guys who own New York PubKey. The DC one is like 5 to 6 times bigger. So just imagine like 5 of the New Yorks all in one spot.
Yeah. It won't have the dive bar aesthetic, which I love as well. But it sounds like we're going a little bit more upscale here with a restaurant, a really nice restaurant. Apparently, it's pretty cool. Yeah. Anyway, shout out Germana and those guys. Okay, what else? Let's see what we got next, guys. Where do you want to go next, John? We can talk about. This is interesting. I haven't thought too much about this, but this it is an interesting chart. A big drop in Social Security benefits. This goes back to 2017. This is the biggest drop on record. I mean, is there any concern here? I read that it had something to do with basically reclaiming overpayments. So apparently, like takesies, backsies are allowed when it comes to Social Security. I don't know. Is that how is that legal?
My big picture take on this, I think it's semi interesting because look at that line. It doesn't really go down much, and if it does, it's very slightly down. And this is like the first time it has spiked down. I think this shows that some of the stuff that Elon and the Doge team were working on, it was not all for nothing. Like they did talk about the inefficiencies of Social Security, dead people getting checks, people getting overpayments, whatever. It looks like they have righted some of those wrongs. But you still have to look at the bigger picture here. And it's like, that doesn't stop the train. Like this is a drop in the bucket. Like, okay, good. These systems should not be so inefficient. The government should have an idea of who they're actually sending money to. Great. But like, this doesn't change the fact that the deficit is going to be massive going forward. There's just too many other things.
Totally. It's and this showed up on the payrolls. There was some income reporting that came out. It was like this large drop in like income growth, but I think it was just downstream of this Social Security adjustment. So I think this kind of carried a lot of the impact today.
Yeah, that one's a pretty quick hit there. Next, Brady, we could go to maybe the ECB tweet. Just do a quick round the horn on that one.
All right, I do have this one. Yeah, so ECB claims that there's an urgent need to channel retail savings into capital markets. This is, I think, goes back to a plan that they ratified or passed in 2022 or 2023 that did talk basically a plan to like get more retail savings into in the capital markets to kind of get things more liquid and for investments, et cetera, and growth. And I guess from what I've read, this is essentially them saying, hey, we are basically going to like encourage this. They're stopping short of requiring it at this point. They're talking about opt-out programs where you are automatically enrolled in some kind of savings investment program. The UK has a program like this. You have to actively opt out of it. In the UK, only 10% of people opt out of it, for instance, so it's pretty effective. But this just does show a bit more desperation than we've seen on this front from the ECB in the past.
For sure. And this is one of those things that, if you click into the headline, what they put there is pretty alarming, talking about channeling retail savings into capital markets to develop the markets and finance EU priorities. There's all this like collectivist speak here.
That's a pretty alarming sentence, honestly.
Yeah, like it should be alarming to anyone. Now, if you click into it, these people are smart enough to not be like, "Hey, everyone, government central planning and capital controls are here." Like they don't describe it that way. They do, at least pay lip service to, oh, the retail users will have choices. We'll make sure the fees are reasonable. Oh, we want them to have good returns on these projects too, on these investments too. But it'll finance EU projects and priorities and blah, 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 blah. And I think anyone who's been on this earth long enough should know what direction this is heading. It is towards central planning and capital controls. It's not full on yet, but this is paving the way.
Yeah. It's it's just fascinating that they're kind of dripping this initiative out and trying to like it's an insane proposition, but it's like they're trying to build some sort of I don't know, tolerance for the idea. You know what I mean? It's full on financial repression.
Did some chat GPT research, and it sounds like in the EU, member states have various forms of tax advantage accounts similar to an IRA or a Roth in the US, but there is no EU-wide one. I wonder if they don't start with an EU-wide new type of tax advantage account, and you get the tax advantages if you invest in the EU. Makes sense for them to go down this route, but yeah, I agree. This ends with capital controls. There's no way around it.
100%. This is they're moving fully towards it, and they have a problem. And like the EU is a very different economy from the US. It has lower growth. It has bigger fiscal problems. Stock market doesn't perform as well. Bond markets don't perform as well. So we'll see.
But good sardines, though.
Excellent sardines. Great food. Lovely place to visit. Lovely place to live.
Before we move to the next one here,
I'll answer this one real quick. Satoshi Witness. The UK just has an auto-enrollment. The government has an auto-enrollment program, so it requires employers to automatically enroll any eligible workforce, members of the workforce, into a public pension program. There's many of those pension programs that could be chosen from, I believe, but it's a requirement, and apparently only about 10% opt out. So it's a way to sort of do capital controls in a roundabout way, the opt-out way.
The sly roundabout way.
The sly roundabout way, yeah.
Quick history lesson going back to PubKey for a second. During the Revolutionary War, all the pubs, which is short for public house, which is what they used to be called, not all of them, a large number of them were actually served as a nucleus for the Patriots planning all their treasonous activities. And so you could go there, grab some coffee, read the newspaper, and discuss with other people and sort of plan the moves. And I like the parallel here, putting one in DC right now with the Bitcoin public house.
Nice.
Just imagine if they had creatine in those public houses.
Creatine martini, baby. We got to make it happen. Creatinis all around.
Shout out to the chat. We get a lot of good comments in the chat. I did not see this, but I'm going to go look for it. Someone said, did you see Jeffrey Gunlock, who's kind of this legendary bond portfolio manager? He runs Double Line, and apparently he was on Bloomberg saying Bitcoin, gold, and international, I assume that means non-US stocks, are where people need to be. So thank you to the astute listeners and viewers. So I'm definitely going to check that one out.
I was looking for that after I saw that. I think there's an interview from June 11th. So it's maybe 2 weeks ago, but I can't listen to it, but I'd be very interested in that.
For sure. We do have another clip. Brady, you tell us if it's ready, but there was actually we have two CNBC clips that we could play here. If you have either one of those ready, Brady, I say we go for that.
Yeah, here we go.
And just to give the background of who this is, Philip Lafont is a hedge fund manager. He is a billionaire. He was on CNBC, I think just yesterday morning, or maybe the day before, talking about Bitcoin, and had some interesting things to say.
Stay on it, and maybe today it's a $3 billion company, but let's say it doubles in 5 years, it could be 5 or 6 billion.
Oh, trillion.
Trillion, yeah, sorry, of course, trillion. Then we added Bitcoin. We thought of Bitcoin as a company. Today, I think Bitcoin is 2 trillion. We're like, well, could it get to also 4 or 5 trillion? Obviously, Bitcoin's not a company. It'd be like saying if gold's a company, but I thought it was interesting as a
Market
new
cap,
asset.
yeah. Market cap. Yeah.
Market cap,
Amazing.
2 trillion is
When
so
did you
big.
get involved in Bitcoin?
You know, I've not gotten involved with Bitcoin, and I wake up every day at 3 in the morning, and I'm like, why am I such an idiot? What have I been waiting for, not being involved in it? And it just goes up and up. In the past, I think this is interesting, the retail investors, they were much faster at getting involved with Bitcoin than the institutional ones. And I always thought Bitcoin's amazing, but it's double or triple the volatility of the NASDAQ. NASDAQ's already pretty volatile. Why do I need to deal with this added volatility? Recently, Bitcoin, when it went down during the tariff, only went down as much as NASDAQ. So it seems the volatility as an asset class is coming down, which I thought was
Okay,
pretty
so but
interesting.
given your sort of thesis, do you say to yourself, even at this point in the ball game, if you think it's going to double or triple and going to be part of the NASDAQ 100, if you were to think of it as a company?
Yes, I have to think about it.
That you should own it now?
Yes, I have to think about it now. Do I own it now? Do I own it tomorrow? In a few days? But every day, I do think, why do I not own it? And I think to be a good investor, it's not just like owning the obvious stock, but sometimes you have to change your mind, and you have to just say, well, I made a mistake, and I'm changing my mind, and maybe Bitcoin will be that.
How do you come up to that valuation? Is it as a percentage of gold's market cap or something?
So I thought like the market cap of the world, the net worth of the world is, I think, 450 to 500.
True.
Equities are, let's say, 120. Gold above and under the ground is 20.
20.
And then Bitcoin is 2 trillion. And I was like, okay, well, 2 trillion, let's say it represents 0.5% of the net worth of the world. Could it go to 1 or 2? Some people say, oh, Bitcoin's going to be 100 trillion. I'm like, okay, that's not, maybe a bit of an aggressive estimate, but could it double over a period of time? And then we talked about the de-dollarization of the world, the end of U.S. exceptionalism. So those would be some of the reasons.
Let's check in 20 years, Philippe.
It's kind of amazing, is it not? Like, I mean, first of all, the stuff he's saying, one of my first thoughts is like, well, I'm like, yeah, right on, right on. But then it's like, man, if you've been on Bitcoin Twitter, how many years have you kind of known all of those talking points? Now it's not even the first billionaire hedge fund manager. He's one of several billionaire investors to make these same type of statements on CNBC.
Yeah, totally. I think there were a couple things that were remarkable here. Like, one is obviously you can see the changing tone of like, I'm forced to contend with why I don't own this thing. Like, that's a different framing. It's saying that like this thing has been so loud and obvious and material that the question is not why would you own it? The question is, why haven't I already bought it? And I think that's like an important and material framing. The other thing, I tweeted about this, but he talked about how in the tariff trade war sell-off that Bitcoin only traded down as much as the NASDAQ. And so there was this reduction in volatility to the downside. I've heard this from a few places, including from BlackRock, that some people that have had meetings with BlackRock, that this was the thing that, so obviously they did the ETF. And so Larry Fink was like, we're going to do Bitcoin. But most people in the org were like, you're crazy, or I don't get it, or I'm skeptical. Like, it wasn't that BlackRock as an organization was like super orange pilled all of a sudden. When Bitcoin fared better than stocks during the trade war, that was what did it for people. And a lot of people within the company were like, whoa, okay, this is material now. Because it's not just like this like 2x levered NASDAQ. And so hearing him say that evoked that for me, that I think this was a big moment for many institutional participants.
And just to add to some of those, I got myself thinking about it with billionaires who've said something positive in public about Bitcoin. You have to start with Michael Saylor, Jack Dorsey, Tim Draper, Ricardo Salinas, Paul Tudor Jones, Stanley Druckenmiller, Ray Dalio, Peter Thiel, Bill Miller. There's probably more, but like there's now a long list of billionaire investors who are telling you that, like Steven said, it's not just their Saylor. You can kind of put in a different category, I guess, if you want to say, oh, he's just talking his book. To Steven's point, a lot of these people have reluctantly said, I have to pay attention to this thing. I have no choice. So that I think that list is going to grow over time. I just listed off 7 or 8. I think you're going to see more in the coming years.
I think the funniest thing here is that as Bitcoiners, we've all gone through that panic moment. He says 3 o'clock in the morning, uh-oh, I'm short Bitcoin. I don't own enough. We sell our chairs. We do whatever we can. And I think a lot of people, myself included, didn't expect every hedge fund manager, billionaire to have the same panic feeling that the Bitcoiners have. But that is what's happening. And so economic reality is imposing itself. And we're watching the largest allocators in the world have the exact same experience as the average Bitcoin pleb did over the years. And that's just beautiful to see.
Yeah, and he mentioned that too, right? He mentioned that the retail investors were able to front run, all of this, what's happening right now, which is all this kind of institutional adoption. And it's cool to see him note that. It is very, very cool. Like, it's like a singular moment in history. I can't think of another moment where, I mean, there probably are, but it's very uncommon, it seems, where you have an asset with the potential of Bitcoin that is sits around for so long without being recognized by major corporations, investors, et cetera, before being picked up. There's probably some examples around the internet and internet technology and stuff like that. But you weren't really able to invest in that, right? Like there was no way to get capital in that until the companies were actually formed. So it's fascinating.
It's absolutely poetic watching the old guard in finance be late.
Yeah, it's good. It's good stuff. I mean, it's still less than 0.1% of people, have any exposure to Bitcoin. There's estimated to be something like 11 million whole coiners on the planet. I mean, it's absurd. It's just it's where if you're watching this right now and hanging out with us, like you're one of very, very few people on the planet. And in 20, 30, 40 years, you're going to have some stories to tell. That's all I can say. Yeah.
I think that's right. That's right.
All right. What's next, guys? I lost all of our clips. A technical error. So
I got a couple good ones here.
We can screen share. We can still screen share.
Okay, cool. Yeah, this one. So it's Andrew Hones was presenting at the BPI conference, and Matt Cole posted this to Twitter. It basically says how the bottom 10% of long-term Bitcoin returns, if you divide up, the periods of time you bought in, obviously some entry points are a lot better than others. But if you look at the bottom 10% of the long-term Bitcoin returns, and then you do the same exercise with the S&P 500, the 10% basically best periods to buy into the S&P 500, the worst 10% for Bitcoin still beat the top 10% for investing in the S&P 500, which is pretty astonishing. Obviously, you want to try to get your market entry to be as attractive as possible, but it just makes the point that even if you don't with an asset like Bitcoin, you can still do very, very well. And this probably is just another supporting factor for why legging into the market over time, recurring buys, DCA, whatever you want to call it, is really attractive. Just because you're going to get entry points in each of those, rather than if you just do one lump sum, you're going to, hope you're in the top, but maybe you're in the bottom. But anyway, I thought the numbers here are pretty interesting.
Yeah, one to add here is, just for clarity, in case you're not on the YouTube stream or seeing the images, is that this is over a 4-year holding period. And so both, don't stress about your entry point 1, point 2, make sure you hold it as long as you possibly can to minimize any short-term volatility.
Good point.
Absolutely.
So let's talk about Bitcoin Treasury Companies for a minute.
Never heard of it.
There's lots of talk about Bitcoin treasury companies on Bitcoin Twitter, and it's somewhat divisive amongst the plebs. So we can talk about sort of the news in a little bit, but let's just talk about the principle of and the idea of a Bitcoin treasury company, the ethics of a Bitcoin treasury company. First of all, I'll just start by saying they're inevitable. It's happening. There's an arbitrage. The arbitrage is going to be exploited. So it's going to happen. That's the way capital markets work, right? The economy works, capitalism works. So let's start there. It's going to be inevitable. But is it a benefit to Bitcoin, and is it a benefit to our economy in general for Bitcoin treasury companies to exploit this arbitrage at scale? And I'll throw it to Steven. Steven's an investor, the VP of Investor Relations at Nakamoto, which, you know, this is your business now, man.
Yeah. I think it is beneficial, right? It is beneficial because it is a process which effectively takes the Bitcoin world, takes the fiat world, and accelerates that process or brings it closer together. If you think Bitcoin is good and you think fiat has some issues, then this is good. You're effectively putting pressure on the kind of financial system to deal with the fact that Bitcoin exists. Now, could it be done in a bad way? Of course, like, you know, if Bitcoin, you know, if you had some giant, insane, never-ending kind of speculative arbitrage that shoots Bitcoin up to millions of dollars, would that have certain negative externalities in the transition? Sure, right? Like, we don't have to take it to extremes, but in generally, the doing of this is forcing the financial system to contend that there is a new form of money. And like you said, this is an arbitrage. Like fiat, treasury companies are arbitraging fiat, and they're arbitraging public markets. There's two things they're arbing. One, I think most people understand. They're borrowing or something approximating taking on liabilities in dollars, and they're buying Bitcoin. So they're borrowing a depreciating currency and buying a form of money that appreciates in value. That is an arbitrage. And that's the part most people get. But there's something else that's key. And this is that they're engaged in a regulatory arbitrage. Now, that doesn't mean they're breaking the laws or going against regulation or anything. It means that they are using a regulatory gap. And what this is that publicly traded companies, public equities, can access forms of financing and other sorts of financial offerings that individual investors can't. A public company can get a 10-year uncallable debt or 5-year uncallable debt, or they can borrow at a lower rate, or they can sell equity at a premium. These are all tools that individual investors can't do. And so they are, in a sense, they're arbitraging the difference between what is available to a public company and what is available to an individual. That's valuable because it allows them to accumulate Bitcoin. And there's a second piece of what they're arbitraging, which is access. And this is another regulatory arbitrage. Most capital in the world cannot buy Bitcoin. I would be pretty comfortable saying most as a percentage of total dollars. There are fixed incomes funds. There are funds with specific investment mandates. There are not, kind of designated funds, but they still can't buy Bitcoin because it's a weird asset that sits outside of the system. They don't have approval. They have to invest in equities, or you're in a different country, right? You're in Japan, you're in South Korea, you're in Saudi Arabia, and there's all sorts of different limits there. And so broadly speaking, across the world, a publicly traded security can be purchased by the vast majority of capital. And especially once you bring in some of these fixed income products, you've basically targeted all of capital, minus some VC stuff. And so you're increasing in a positive sum way the total amount of dollars that can flow to Bitcoin because you're expanding market access and then you're engaged in a fiat arbitrage. And so these things are wildly positive for Bitcoin. They're wildly positive for the price of Bitcoin. And if you think Bitcoin is good and the price of Bitcoin going up, if you think that is good, then these companies are helping that.
So these arbitrages could be closed through regulatory changes, and that will probably happen over time. So
I think it's a very long time
well,
frame,
I know that,
right?
yeah.
So
Okay.
like,
What does time frame look like?
So so let's talk about, there's two kind of arbitrage opportunities here. One is fiat. So as long as fiat exists, there is an incentive to borrow fiat and buy Bitcoin. I don't see that changing anytime soon. That's going to be a very long process. That doesn't mean that the percentage gains can't slow down and it doesn't become, a more saturated opportunity. But as long as fiat exists, there is an arbitrage between fiat and Bitcoin. Now, on the regulatory side, there's two things I said. One is that public companies get specific access to other things. And two is that there are jurisdictional restrictions. The jurisdictional restrictions, those might start to close over the next few years. Like as this happens, you could see Japan's already talking about, well, maybe we can roll back this really harsh tax treatment, right? You start to see that change. So, maybe over the next few years, some of that gets less. But the ability for a publicly traded company to access financial vehicles and offerings that individuals can't, I don't see that going away anytime soon. So these are what's interesting about this opportunity. Yes, there is an ARB window, but this could be a very large ARB window. This could go on for a while.
Here's the question I was going to ask. The concentration of Bitcoin. People have concerns about Bitcoin being concentrated in, like dozens, maybe hundreds of public companies. Is that bad for Bitcoin? Is that bad for Bitcoiners?
Yeah. So I think the right way I'm going to take a little care to answer this question well. So we need to first state, like, what is the alternative? And so I think there is this fear of like too much Bitcoin ending up too concentrated in large holders or large corporations. But I think there is a countervailing risk. And the risk is that Bitcoin adoption doesn't go fast enough to protect it from pushback, right? There's a world where the price appreciating and large numbers of people having financial exposure to Bitcoin both protects it because it's too big to target, and it also has an element where the holders benefit because the value is going up. There's more liquidity. It's more able to fund development. There's all sorts of kind of positive externalities. So you're always kind of weighing these two. One is like, if adoption goes too slow, that can be a risk to Bitcoin. And then on this other scenario is like, it's almost like too quick. It's like corporations are in like a land grab. And so the sweet spot is obviously kind of in the middle of those in certain ways where you want more people to own Bitcoin. So one, I just want to frame it that way. Two, so when you think of a Bitcoin ETF, I think of the Treasury Companies in similar ways. A Bitcoin ETF is not really BlackRock has 700,000 Bitcoin. There's like tens of millions of shareholders. It's a holding vehicle that represents many, many people owning those Bitcoin. The Treasury Companies are the same thing as a publicly traded equity. There are millions or tens of millions of shareholders. MicroStrategy, it's not really fair to say like, oh, that's Saylor. Like Saylor controls all that Bitcoin because Saylor is bound by the litany of public regulation and shareholder agreements that public companies operate with. Now, that's not me saying that Saylor doesn't have more control over that Bitcoin than you or I do. There's obviously decisions he can make, but it's also not true to say it's just like one person or one company owns it all, because that company is owned by millions of people or more. And so I see these kind of vehicles as they really are ways that many, many people will get exposure to Bitcoin. And where you get into kind of the weeds is like, well, they have financial exposure to the Bitcoin, but they don't actually like own the keys. They don't actually control the asset. And that is true. They're only getting financial exposure, but I would argue financial exposure is better than nothing. Financial exposure means a lot to people when it saves their family, when they can, afford the life they want to live. They'll be pretty damn happy to have financial exposure. And I also have another view that I actually think the Treasury companies accelerate spot Bitcoin adoption versus the alternative. And the example I'd give here is that in 2017, a ton of retail onboarded through crypto. They bought crypto. They bought, shitcoins and ICOs. 2018, as they kind of digested all of that, and a lot of people realized Bitcoin was the thing that matters. And so the onboarding into crypto ended up creating more Bitcoiners than really had ever been created before. I think 2017 was the biggest retail onboarding. And I think there's something similar. I'm not saying treasury companies end poorly like 2017 era crypto, but I think people come in, they buy the stock first. This has already happened with MicroStrategy. But eventually they start to ask questions of like, well, what is this Bitcoin anyways? Like I could get it myself. I don't have to buy the company. I could download a wallet. Some percentage of those treasury stock owners are converting to spot Bitcoin over a 1 year, over a 2 year, over a 3 year time horizon. And I think that's true. And we've already seen that happen once with MicroStrategy. I've tried to say this, that people need to understand there's an entire cohort of Bitcoiners out there that owned MicroStrategy before they ever owned Bitcoin. And some percentage of those people they now own Bitcoin.
Sure. Yeah.
I've got a couple to add here. First, let's go back to Pierre, Satoshi Nakamoto Institute. He wrote the Speculative Attack article in 2014, which is essentially you borrow in a inflating currency like the dollar to buy a better form of money, Bitcoin. And this is just a form of that. And this is only going to continue to accelerate. Just shout out Pierre for writing that beast in 2014. He's been consistently ahead of the curve, and it's truly impressive.
Real quick note. Pierre and Goldstein did just like a podcast on it this week. They went back and revisited it. It was really good. Anyway, you can dig it up.
I'll dig that up. Next one, another risk here, Stephen, is the nationalization risk. So if the U.S. owns the majority of the Bitcoin in our publicly traded companies, our miners, our Coinbases of the world, what if the government wants to seize those assets and nationalize them for some strategic interest? I think that's a real risk. However, the reality here, gang, is that incentives got us to this point. People have an incentive to build out these treasury companies and acquire Bitcoin and et cetera. And so that's happening, whether we want to moralize it around it or not. And so that means, what can you do about it? On the nationalization risk, we should be launching treasury companies outside of the US to, plug Nakamoto on accident there. But it's both probably a good investment strategy for Nakamoto, but it's also a counterbalance to the US dominance that we're seeing right now. The next one here, what can we do about it? Drawing on a recent podcast from Guy Swan, Bitcoin Audible, shout out Guy. He essentially reviewed one of Cali BTC's recent proposals. I think he published it in May, about doing some really, really cool stuff with the Chami and eCash mints. And so that's getting no love on Twitter. You go on Twitter, it's Treasury co-announcements. But quietly under the hood, we do have cypherpunks, thankfully, building out the medium of exchange, the more cypherpunk value ways to use Bitcoin. So that's happening in parallel right now. And if you want that side of the industry to grow, fund those things, talk about those things, because obviously we need both. We're in the gold rush now, but at some point that'll reach some sort of maturity. And we do want as much cypherpunk tooling as we possibly can to extend this thing out. And that doesn't just mean changing Bitcoin Core. That means extending the functionality that we have access to now, like Chami and eCash mints, like Lightning Network and everything else.
Those great points. I want to follow up just on one thing real quick there. I also have the view that we're in a monetization phase. Right now, it is financially rational to just buy as much Bitcoin as you can, because the rate of growth on Bitcoin is going to outpace you investing that money in producing something, right? That's just the phase that we're at. That won't last forever. At the end of it, all over the world, you have these treasury companies that, between many, many different companies, own a pretty large amount of the Bitcoin, right? 10%, 20%, 30%, I don't know. But like, of all the companies all over the world, period. It's like, distributed, but it's a large chunk. those companies, once the kind of land rush phase is over, they then need Bitcoin to do well. They are hugely incentivized holders of Bitcoin. And my view is that they actually become the financial backers of things which improve Bitcoin and drive more Bitcoin value, because they benefit more than anybody else if Bitcoin's price continues to appreciate. So I do view a likely outcome is that these companies end up being a friend to developing, improving, and working on Bitcoin. And yes, like everything else with Bitcoin, there will be tensions and there will be incentives and people will disagree on what's good and what's not good. But there will be a lot of capital that is highly invested in Bitcoin.
And let's remember that this capital will be very forward and long-term thinking, as opposed to corporation and banks right now who are tied to quarterly earnings, etc. But you don't necessarily have to beat quarterly earnings because you can trust that Bitcoin will still be valuable and very likely much more valuable 10, 15, 20, 30, 40, 50 years from now. And so it really changes the mindset about, and we've talked about this, Bitcoiners talk about this all the time, but apply that to a company that has 500,000 Bitcoin, right? And imagine the things they can do to like build a better world, which they're incentivized to do because it'll make their Bitcoin more valuable.
And I'll just throw in a few things. I mean, you guys made a lot of great points. As usual, once we start talking about Bitcoin Treasury companies, we're just like in it for at least 15 minutes, which is great. One thing I'll just say is that like there are some just silencing a call here. There are some limiting factors on, like we've now, November of 22 was kind of the low point of the last low point for Bitcoin. So like we're going on almost 3 years of being in like a pretty strong upward trend, right? Let's just say, for argument's sake, Bitcoin hits 300K at some point and we cool off. There's a blow off top or something. During that blow off top period, there's not going to be that many Bitcoin Treasury announcements, even though the fundamental reason to do it will not have changed. But sentiment in markets is a real thing. Like you just won't see as much money come in. MicroStrategy will be buying, the truly convicted names will be buying, but you're not going to see as many new entrants come in and capital flow in to say, sure, I'll fund the pipe. Sure, I'll buy that convert. So that's going to slow. I'm not saying it's going to be, the trend's going to be done, but we have to remember, like right now we're in this like ramp up period and there's going to be some things that slow it down. One other thing, which is more of like a big picture Bitcoin comment, I think there's something to be said about how when people are not really concerned about holding the Bitcoin Treasury company stock in their brokerage account, let's just say you're not even trying to outperform. Let's just say you end up with the same performance holding the Bitcoin Treasury stock as you did if you just held spot Bitcoin. They're not like truly, and they might just be like, oh, okay, fine. It worked out the same way. But the ECB tweet today kind of reminds me that like, if we're in a fourth turning world, Quidam's ears just perked up. You heard fourth turning. If we're in that world, like you might see capital controls and like burdensome tax regulate that might make you want to hold spot Bitcoin. Right now, people are not, that might seem kind of crazy to think that. But to give an analogy, kind of make the point, if Elon never bought Twitter, a hell of a lot more people would probably be using Nostr right now. And that's because there would be like more of a reason for them to say, I can't use this centralized platform because it got so bad and controlled. I'm going to use this other thing. Like there's not a ton of downside to holding a Bitcoin Treasury stock in your brokerage account. I'm not suggesting that it's going to be like seized or something in the future, but like we are in a fourth turning, crazy shit might happen. And I think there will be events that people might say, oh, that's why I should hold half, my Bitcoin exposure in spot Bitcoin. That might not happen for a while, but it's just something to keep in mind, big picture.
Totally. 100%. And like, I'm obviously going to work on these companies full time. And I would even totally agree with that. I mean, you should own spot Bitcoin in cold storage. There are irreplaceable, irreplicable properties that you get or you lose when you don't do it. So it's like treasury company exposure is not a substitute for Bitcoin in cold storage, but it is it's a higher volatility, higher return, higher vol like part of like, taking a little more risk for a little more return. And that's not a bad thing to do with part of an allocation, right? Like appropriately sized based on your understanding and education level. So 100% agree. I also want to like shout out. So, since the announcement, I've talked with a lot of Bitcoiners about Treasury companies, right? People have asked me questions. People have come to talk to me, and just a lot of people have shared their thoughts with me about these companies. And most people have concerns. Most people are like, I would say the majority of people are mildly to materially skeptical, which is interesting to me because I think it tells us we're actually earlier in this trend, because even the Bitcoiners are not really fully on board yet. So kind of a positive on a sentiment, market timing, market cycle level. I think that's very positive. But that's not what I'm here to talk about. The concerns that get shared. So there's probably like 4 or 5 main questions that I get from people. One of them I want to touch on. I saw someone in the chat. Someone said the institutions and BTC Treasury companies are why we won't have big drawdowns. Now, so that's interesting. One of the concerns that I hear is these are why we will have a big drawdown. However, there's also reasons to believe, as Jonathan said, they actually could reduce the drawdowns. Now, both of these are possible. I think it's something interesting to talk about. The scenario where they cause a big drawdown is where these companies proliferate rapidly and they take on leverage, or they're like really weak hands. And so then when the price falls, they blow up, they have to sell the Bitcoin, or they're weak hands and they panic sell the Bitcoin. That's a scenario where, that could happen. And that could accelerate the drawdown. However, we don't see that kind of leverage yet. It just isn't in the market. And I would argue the companies that exist today, it is a kill shot. Like, it is the end of your company, I think, as a treasury company, if you start net selling Bitcoin. Like, you're decreasing Bitcoin per share. Once that starts, there's no reason for investors to hold your company. Like, the companies are just Bitcoin acquisition vehicles. And so I think most of the companies that exist today, and I would argue most of the companies that will or should exist, should understand they have no option but to keep going. If you're going to do this strategy, you need to continue to increase Bitcoin per share, like MicroStrategy did, even in the bear market. And so if that does happen, we don't get a lot of toxic leverage, and companies realize that it's game over if they start selling. They can't get out of it. They'd lose more stock value, like the MNAV would disappear. They'd lose so much more stock value trying to sell the Bitcoin than they would just like eating the bear market and buying more. That if that happens, now you have an army of corporations around the world whose only focus is how to get more Bitcoin at these cheap prices. Now that would reduce the volatility to the drawdown. And actually you could see the volatility actually being suffered by the equity holders rather than the spot Bitcoin. The equity holders could absorb the sell pressure. And so, yeah, you'd have a tough time holding some of these stocks, but it would actually help Bitcoin. And so both of these doors are in front of us. We don't know which one we're going to go through yet, but they're both possible.
Well, there we go. Perfectly on time too. And that wraps Steven's last episode. Thanks for the run, man. We're going to miss you. I know, obviously, we're going to still have the group chat. We're going to still have the Swan Signal group chat, which is popping, by the way. One of my favorites. So we'll still be friends. Obviously, we're going to miss you in Slack and working together. Thanks for building up Swan Private and really getting that whole business started. It's a absolutely crucial part of our business. So appreciate you, dude. And any last words, and then we'll pass over to John and Brandon to say goodbye as well.
Yeah. It's been almost 5 years. It's been an incredible time working with you guys. And, I don't really feel like I'm going to be that far away. Like, we're all kind of working for Bitcoin, and like, but it's bittersweet. And it's like, Swan has just been so incredible. It's been such a life-changing experience this was like, I worked as a consultant prior to Swan. I did like, I helped kind of individual investors navigate it, but Swan was my first kind of like full-time like Bitcoin engagement, and it was life-changing. And I met so many people, and, like you guys and everyone inside, but also people in the industry and Bitcoiners. And, when I first got into Bitcoin, it was 2017, and I felt like I was pretty late. It's like, the 2011 guys, 2013, those were the early guys. I kind of showed up with the big retail wave. But it's funny, as I reflect on just my time at Swan and my time in Bitcoin, I actually think, man, it was so early. It really was. And we continue to be relatively early. I think we're like actually on the cusp of something that looks more like an early mainstream moment now, finally, in 2025. I think that's kind of what we're going to see. And we're seeing that, like, this is what it looks like when the world really wakes up to Bitcoin.
Right.
So I kind of have just a tremendous gratitude to have walked alongside you guys and with Swan during this like really early phase where most people did not understand Bitcoin, and to get to work on it and do everything we got to do. I mean,
Metaphorically walked and quite literally walked as well.
Yes.
John,
Absolutely.
any closing words?
Definitely doesn't really feel like goodbye, just because it probably hasn't hit me yet. And I mean, we'll be in touch plenty, Stephen. And as we said, you'll be a guest on the show. I think you will have plenty that you'll want to share with the world on this platform. So we look forward to that. I'll just leave it there. It almost exactly 6 months to the day of when we were hanging out in Miami for New Year's. So also kind of funny timing there.
Yeah.
All right, Stephen. Brady, I sent you a link if you want to put it up in the private chat. But I'm reminiscing from the 2021 Clubhouse days when Corey's like, hey, I'm paying you guys to be on Clubhouse, make it happen. And we meet this Jambala Hodl guy who's got some interesting takes. We're supporting him for a while.
What the F is Jambala Hodl?
Shows up on the first Zoom call. It's a vegan house cat. 3 years later, he got all of Bitcoin Twitter to sun themselves to get their steps in, and now he's fully transformed into a jacked and tan lion. Shout out Animorphs for the creative inspiration on this one. In all seriousness, Stephen, I really appreciate the time together. It's been an honor working with you. I'm really proud of what we've done at Swan, and proud of what you've done personally over these last 3 years. And your star will continue to shine, as they say, and I'm rooting for you. And lastly, if the group chat ever gets leaked, I meant everything I said.
All right, everyone, check out swan.com/private. That's the business that Stephen helped build up and led, and John is a managing director there as well. So check out swan.com/private. Check out btcandDC.com. Again, we mentioned it earlier. There's going to be some cool stuff happening in DC September 30th, October 1st that week with PubKey and with the conference BTC and DC. Also, shout out to Mara. Thanks for securing the Bitcoin network. Thank you for supporting the show, and thank you for owning a ton of Bitcoin. Great job. Congratulations. All right, everyone. Take care. We're out.